Most business owners are paying themselves the wrong way. Here are some quick tips about how to pay yourself better. Firstly, how you pay yourself is dependent on what sort of business structure you've got. So let's start with the simple one, a sole trader. Okay, sole trader means the business is in your own personal name. Most people start out that way because it's cheaper and easier. To pay yourself as a sole trader, just simply draw the money out of your account. It's your money after all. Only downside is that you've got to be disciplined with your cash flow. Make sure you've got some cash retained to pay your GST and pay your taxes. If you've got a company structure, there's several different ways you can pay yourself. You can pay a salaried employee. You pay PAYG, you pay your super, you pay yourself so you pay every other member of staff. The other way to pay yourself is by dividends, making sure the profit's distributed out to you as the business owner, and whether it's franked or not franked, as part of that. Or you can pick a hybrid strategy, somewhere between the two. Pay yourself a salary wage and a dividend. And here's what I recommend. Pay yourself as an owner, and that is, what would someone in your role get paid? So if you're a director of a chartered accounting firm, you're probably making $200,000 a year. So you pay yourself $200,000 a year, because what that means is you can swap yourself out and put somebody else in that role who could do it for you, and you still know how much you make. And then your return as a business owner is paid to you via dividends. Okay, and that way it's a nice neat way of working out how much you're making as being a business owner and how much you're making as an employee. And so make sure you market test your own salary every now and then as well. Don't forget about superannuation. If you're a sole trader, you don't have to pay your superannuation. Ensuring you make your contributions every year is important, because you need super when you retire. And as part of that, you've got to lodge the right forms with the superannuation funds on the way through. So don't forget that. Company directors also have to pay themselves superannuation. If they're paying directors' fees, don't forget the super on those directors' fees. If you pay yourself a dividend, then there's no super. Some things to think about, though, in terms of timing and cash flow. Firstly, always make sure you've got 3 to 6 months cash flow saved up. Have you ever heard the story of Microsoft? Bill Gates said a long time ago they have to have at least 12 months in cash flow saved up. And he does. Microsoft still has 12 months of cash in the bank. So if Microsoft have made a single dollar of sales in an entire 12-month period, they still have enough cash to keep operating. That's pretty incredible. Dividends are paid out of retained profits. So that means your business has got to make a profit. And that's not just a legal thing too. It's actually just economics. So look at your balance sheet, look at your retained earnings. That's what you can pay yourself out as a business owner. That's your return on your investment as an owner, as opposed to salary wage you're paying yourself, which is your salary wage, your reward for your efforts in working in the business. And wages also require payments of PAYG, that's PAYG withholding tax, and superannuation. And speak to your accountant about making sure you get the right forms lodged with the ATO for those pieces. Finally, at least once a year, sit with your accountant to go do some tax planning. That'll help you work out, especially towards the end of the year, what the best mix is between your superannuation, your dividends, your salary and wages, and any other cash flows you want to take out of the business. That mix can be optimized every year. That's the wonderful thing about owning your own business. Unlike being just a salary and wage employees, you can actually optimize how your tax structures work and how the money comes out of the business. So here are 3 key takeaways. Firstly, separate your personal and business expenses. Make sure those two things are different, especially if you're a sole trader, because it's very easy to mix those things up. Secondly, plan for tax all year round. And I don't just mean plan pay tax, I mean actually tax planning. Okay, is what you're doing the most efficient thing? And finally, superannuation payments are an essential feature. They're not optional. You'd hate to go through the next 20 or 30 years, work hard on your business, and have nothing to show for it at the end. Superannuation is an enforced saving. And it's a great tool to increase your personal wealth.